Coming up on Market to Market. The Vice President beats the drum on trade. Changes to SNAP could leave millions without benefits.
In our economy, that's really
a conversation with Secretary of Agriculture Sonny Perdue.
That's what we have a surplus in.
And market analysis with Sue Martin next.
Just this last year on aluminum.
Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
Sukup Manufacturing Company, providing equipment and buildings to store and condition grain to help farmers adjust to market swings. We build drying, moving, and storage equipment designed to preserve the quality of their crops. Sukup Manufacturing, store now, profit later.
This is the Friday, July 26th edition of Market to Market, the weekly journal of rural America.
Hello, I'm Delaney Howell. Agriculture continues to take the brunt of the trade war with China. Prices have been flagging in farm country as the overall economy slows down a little. Second quarter GDP slowed to an annual rate of 2.1%. This is down from 3.1% in the January to March time period. Farmers were given good news in the form of MFP 2.0 as the trade war continues. The $16 billion package was unveiled late this week. Payments range from $15 to $150 per acre, depending on the crop and location. Dairy and hog farmers will receive compensation as well. To unravel what's covered and where to apply, go to farmers.gov/MFP. As farmers wait for an end to the trade war, the U.S. government continues its search for new places to sell American farm products. At the same time, the Trump administration is looking to reduce costs by tightening a few rules. Peter Tubbs has more.
This week, the USDA issued a proposed rule that would close a loophole that currently allows states to ramp down SNAP benefits as a worker's income grows. The rule would make a hard limit to benefits the new standard.
And it changes the state's ability to game the system by allowing people who are not otherwise eligible to be deemed eligible for SNAP.
The USDA contends that in some situations, states have been issuing SNAP benefits without verifying the income of the applicant. Opponents argue an estimated 3 million Americans will lose access to the food subsidy if the rule becomes policy. The Trump administration asked for the closing of the loophole in the last farm bill, but found little support in either chamber of Congress. The same day, Vice President Mike Pence appeared at an Iowa plastics manufacturer to promote the passage of USMCA, the replacement for NAFTA.
The USMCA is actually going to add more than 175,000 jobs to our economy once it puts into effect. $68 billion to our economy just in the initial estimates. This job is a win for American workers, and Congress needs to pass it to the president's desk.
The trade pact faces an uncertain future in Congress, as House Democrats are asking to strengthen enforcement of the agreement's labor and environmental obligations. For Market to Market, I'm Peter Tubbs.
Sonny Perdue is the 31st Secretary of Agriculture. The former governor of Georgia is a politician, but his connection to the land comes in the form of a veterinarian's license. He is tasked with promoting agriculture for the nation's farmers and ranchers. He is also in charge of the nation's social programs, which make up to 80% of the $137 billion annual budget. I was in Washington, D.C. earlier this week and spoke with the secretary. You can see the entire interview at markettomarket.org. Our cover story is an excerpt from that interview. Thank you so much, Mr. Perdue, for taking the time to chat with us.
We're glad to have you here in town.
Yes, very glad to be here. There are a lot of things impacting agriculture in rural America right now that I want to ask you about today. I want to start it off with U.S.-China negotiations, where they're at. Are we going to see China make some olive branch purchases or follow through on some ag purchases here?
Well, certainly that's the president's expectation, obviously, with his conversations with President Xi of China during the G20. I think that was certainly the understanding and the goodwill gesture there that needs to happen. And he has continued to tweet repeatedly after that of his expectations. But the ball's in China's court. And I think they're having a tug of war match within China over what they want to be and how they want to proceed in that way. We were making great progress earlier this year, as you may know, with negotiations. And I think we were very, very close to a really good deal. But apparently the hardliners got the ear of President Xi in China, and they backed away from that. And we've got to restart. And I think that's a great place to start from.
Since we're talking about trade, I've got to ask, I'm going to start out here with the ATP funding that was just approved. Tell me about what that funding is going towards.
This is part of the overall market facilitation program that President Trump has authorized not only last year for $12 billion, but this year for $16 billion. The reason is the president recognized that our farmers, our producers, our ranchers were going to be at the tip of the spear of retaliatory damage in a disproportionate way in our economy. That's really because our producers are so productive. That's what we have a surplus in. And that's where countries think when they want to harm us in the United States in trade, they attack our agricultural productions. And so that's kind of what's happened in that area. And we are hopeful that we can get these things resolved in a way that come back in that way.
Okay, I've got to ask Mr. Secretary about the MFP payments. We've heard rumors that maybe they're coming out this week, maybe they're coming out next week. Can you shed any light on that?
I've heard those rumors as well.
Did you start them?
No, somebody around here may have, though. We're still working on the final tune of those programs, and we've had several hours of meetings actually about how to do that as equitably as possible, as fairly as possible. So it's much sooner than it had been. I don't know that we want to stick to a certain date, but it's going to be very quickly there for the details. Obviously, we have to get these kind of rules and regulations through the Office of Management and Budget. So that's some of the consideration that we have. Once it's approved, then we'll be releasing those programs and all the attributes of the market facilitation program, so our producers will know. You remember that we purposely did not talk about a lot of details because we did not want to interfere with planting intentions that farmers had. It's been a tough spring all across the United States, and now with the heat, obviously farmers are facing a lot of challenges this year. Late planting, young crops, and now intense heat.
Well, I've got to ask, why did you release it at all during planting and not wait until after the planting season was over for producers?
Why did we not release?
Why did you not wait to release it until after planting was over?
Well, we did wait to release the details of the program until planting intentions were over. We didn't want to impact the prevented planting. I didn't want farmers to try to farm a government program rather than what their production is. So that's really what we wanted to do, was to ask them to do what they would do without any kind of government program rather than trying to figure out or anticipate that way. So we tried to be fairly opaque, indicating there would be a program coming out, but with not enough details that they could try to game the system.
And so just one final question on that. Prevent plant acres are going to be included in some sort of compensation as well.
There will be some consideration of prevent plant acres, and whether it's obviously we've done some things already, as you know, allowing them, the farmers, to plant another eligible crop and harvest that after September the 1st. That's helpful, as well as marketing that crop and some other flexibilities in that way. There will also be some other considerations that came as part of the disaster supplement to help to probably plus up the percentages of prevent plant that farmers expect that way.
And will those payments be released at about the same time as the MFP payments?
Yes, we'll probably do those about the same time as far as that. The disaster supplement might be a little bit ahead of the market facilitation, primarily because of our interaction with the Office of Management and Budget.
Okay. Mr. Secretary, one final question for you. When you look at the health of the rural economy, we've been in a down cycle. What does the next couple of years look like here?
Yeah. It's weather. Obviously, our farmers have been so productive over the last few years. They have weathered this downturn in prices since really 2012 and 2013 in a fairly resilient way. But it's been tough, particularly on younger and beginning farmers that didn't have any equity built up. And even on farmers who've been there for a while, these are economic stresses out there that's real. They're very significant. The problem is for 2019, we've depended on high yields up until now, and that doesn't look likely with the weather that we had this spring, the weather we're having now with the heat stress. We've already taken off about 10 bushels per acre on our estimate of yield going forward, but that's the margin that people were using to either break even or have a little bit of profit in that way. So it's going to be a tough year, but the thing about it is farmers are tough, and they've had tough years before. There's a lot of economic stress. It creates emotional stress, family stress, and community stress, actually, in that way, because many of our smaller communities depend on the ag economy. Farmers are great for the whole economy. If they make a good crop, they're going to bring it to town and spread it around, whether it's equipment or input costs or all those kind of things, the bills that they're paying. So they're great for the economy. They're going to roll it over if they have it. Now, the sad part is these communities suffer when farmers don't have it, and that's the environment we're in right now. So I'm hopeful there's a mantra in farming that says the cure for low prices are low prices, and the cure for high prices are high prices. We've had our low prices. I'm ready for the cure.
Thank you so much.
Next, the market-to-market report.
Renewed dialogue with China clashed with warm weather in the Corn Belt and cheaper grain in South America to pressure the commodity markets lower. For the week, September wheat fell 7 cents, while the nearby corn contract plummeted 16 cents. The enticement of a tariff-free Chinese buying opportunity did little to stop the slide in the soy complex, as the August soybean contract dropped 18 cents. August meal fell $8.10 per ton. December cotton improved $1.47 per hundredweight. Over in the dairy parlor, August Class 3 milk futures dropped a penny. The livestock sector moved higher on cheaper feed prices. October cattle gained $1.40. September feeders put on $4.30. In the October lean hog contract added 52 cents. In the currency markets, the U.S. dollar index gained 90 ticks. September crude oil gained 20 cents per barrel. COMEX gold lost $7.70 per ounce, and the Goldman Sachs Commodity Index rose just over 2 points to finish at 416.45. Joining us now is one of our market analysts, Sue Martin. Welcome back.
Thank you. Nice
Sue,
to be back, Delaney.
Yes, I'm glad to have you. It's always great to have another woman on the program. But let's talk a little bit here about what's going on in the wheat markets. Rabobank released some fourth quarter estimates here that they're thinking the Chicago wheat contract will not get much above $5. Is that what you're also seeing here when you look at the charts, Sue?
Well, I think that wheat has a little bit more of a negative overtone. I mean, yes, we've seen reductions in Russia's production and exports by various entities, ICAR and Savicon, but the key is that U.S. production, the yields were basically pretty good in the hard red winter wheat, albeit protein levels down maybe a little bit. You're looking at the hard red spring wheat and durum production to be maybe the third highest in 25 years.
And is that coming from the spring wheat tour that's going on?
I think so, okay. Yes. And so the conditions are very good. They've had nice rains and all of that. So the key is getting it home. And so you look at that, but yet we also know, okay, Russia's having a little bit of a downsizing because of the heat. You look at Germany and France, and they've been having some issues, mostly with their corn and rapeseed. But you look at Australia, and they still are having some issues with drought in parts of that country. So it's the wheat market right now, with the harvest having pretty much finishing up in Kansas and Oklahoma and Texas, cash values are cheaper than what corn is right now. And therefore, that allows wheat to compete into the Southwest feedlot situation for feeding. And that's going to kind of compete against corn. However, because we don't know acres yet in corn and we don't know what the yield's going to be, we have some unknowns, more supply oriented than anything. If corn was to rally, it'll pull wheat right along with it because they're already fairly narrow in relationship. So because of that, when you talk about wheat, then we have to go over and take a look at corn and say, okay, what are we going to do here? Because there is some unknowns, there's some big ifs in this market, and I think that that will allow wheat to kind of meander around. But $5 Chicago wheat is not out of line. $5 KC wheat would be a nice little coup to see the market do so. I'm not ready to write wheat off yet.
Okay, well, and we'll continue watching the corn story to see how that impacts wheat. So we've got a good question here that I think segues us nicely into the corn discussion from Brian in Marseille, Illinois. He said, has the bullish story faded? How low can this market go on corn with so many uncertainties, as you mentioned there? And are we seeing resistance because of old crop selling?
Well, we are seeing some resistance with old crop selling. The corn market is more loaded long with the managed funds. In fact, they've been downsizing, but every time we catch a nice little rally up, they liquidate a little more.
And if we have that many long positions by the funds right now, why aren't we seeing more volatility trickle into the corn market to bring them?
Probably because the basis levels, one question I have is the old crop really out there? And the reason I ask that is because of last year, what really brought our yield, our national average yield up to 176, happened to be the southern states. They produced out of their mines. They had yields like we would have, and they had beautiful yields. And those were the yields that propped up the main Midwest yields. Now this year's a whole different ballgame. They aren't going to have the yields this year. They'll be good to have average yields. And, you know, they started off with too much moisture. They were inundated with moisture. Then they turned hot and dry. Then they turned back and caught some rain off of Tropical Storm Barry, which was a blessing. But the key is it's been so variable. And now you look at, I'm not real friendly corn just yet. I am on the longer phase, but I feel the market has more work to do. We have too much unknown. You look at a year ago in August, the USDA, currently we are running about 720 million bushels less in feed usage than what the USDA had us targeted for a year ago in August. So that's a third of corn's usage is feed. And then you have wheat, very close proximity in price. That's a concern. You have Brazil with a very good crop of corn, the safrinha crop, and that's the one that tends to get exported more so. Argentina's got a good crop of corn. The only reason we're seeing corn coming in and soy meal from South America is because with a good inverted basis, they're not drawing the product out. Now, granted, if you're in Illinois in the Eastern Corn Belt and you see what your fields look like, you might be prone to hang on to old crop until you get a better feel. What will tell us this is when we get into August, and now the farmer starts thinking about harvest. And all of a sudden he's thinking, I need to make room, whatever. Will he opt under these basis levels that are starting to kind of sink a little bit in some areas, still good? Will he opt to sell it? Or is he going to keep that crop and then hope to get the other one, the new crop, home to get rid of off the combine because it might not store as well? That's a big question, and we'll see how this performs in August with the basis. But my take is, I don't think we have the crop out there that we were told we had. And because of that, I think that's another reason why we have these basis levels so inverted. I spoke at the South Dakota Governor's Ag Summit around I think it was the 10th of July. And I had people tell me that just the day before, for the first time, they couldn't even remember the last time they ever had this, but prices inverted on corn there. This is a sign that they're just not this old crop getting out there. Yeah, there's some probably in farmers' hands. There usually always is. but I just don't think there's the huge glut that they keep thinking we have. I think what happened is in May, when the farmers were so depressed around the 14th of May, that when we made our bottom and we got a 30-40 cent rally, they were none too quick, but what they were going to move some of that grain off to market to appease their bankers.
Okay, Sue, let's continue this discussion. When you look at the soybean crop, we had fresh news this week that China allowed some of their independent or private purchasers to buy some U.S. soybeans, but we didn't really see much of a bounce from that.
No, and it's because we continue every day not seeing any announcements, usually like on a Tuesday, Wednesday, something like that. So, and then we even seen a cancellation of 100,000 metric tons in old crop soybeans. Well, the year ends, at the end of August. That's not far away. So we think that was probably China canceling some. But we shouldn't be too shocked at this because China has even asked Brazil to kind of slow up and defer some of their orders for into August because of the problem they were having with need for soy meal and proteins for feeding hogs. And so that has been part of the problem. And so I don't think we should be shocked at this. It would not surprise me if over the weekend that we see some announcement. Things seem to happen over weekends here with China and President Trump tweeting. So it would not shock me if maybe a good feel announcement comes on a sale over the weekend right before our trade negotiators, Robert Litzheiser and Steve Mnuchin and their negotiators go back over to China on next Tuesday, Wednesday.
All right, so I'm going to save some of the acreage discussion on corn and soybeans for Market Plus. We've got to talk about what's going on in the livestock markets, especially starting off here with the live cattle markets. It seems like domestic production or domestic consumption has been strong. Global consumption has been strong, yet we still remain in these tighter prices. Do you expect us to hold there because of that factor, or can we expect a little tick up here?
Well, we're in truly in the dog days of summer, I think, in cattle. The market has been for the last week and a half just moving sideways every day, maybe a little higher, a little lower. We just don't go anywhere. My indicators that I like to use technically are all negative, and yet we're just marking time. That is the best way. If you want to be friendly, that's the best way to have that happen. I think what's happening is, one, we have very good demand for beef in the U.S. domestically and globally, like you said, but also I think that the feedlots are very current. And the packer right now is thinking he's got the cat's meow with the bargaining because he's got a lot of negotiated cattle contracts out there that he can start pulling here as we move closer into August. And he's going to do that. But I'm not so sure. He may get by trying to bid a little lower. He didn't do much this week. But I think when you have a product that's holding higher than a year ago, choice product at 212 plus, that's a sign demand is very good because the product is holding higher than it was a year ago. And we're also, at this past week, killing more numbers, and yet we're not dropping the market, we're not dropping the product. I think that just speaks to how good this demand really is. And cattle, the one thing I don't like to see normally is to have cattle rally into August because normally there's a tradition, if you do, you'll break into October and vice versa. But you have a discount between the cash market and the futures, both in August and October. And I'm starting to think we keep killing this time here. When my indicators start to turn positive, we're going to move higher. And when I look at the charts on fats and feeders too, it looks to me like we have a huge saucer bottom being formed on the cattle market, which would be friendly. Okay, let's save a little bit more of the feeder discussion for Market Plus. We've got to talk about the hog markets here, Sue. They added 52 cents, I think, from last week. Do they have the chance to go higher here? Or long term, I guess, is it do the technicals point to turning upwards in the lean hog market? Well, the indicators I watch on hogs, some of them a little different than cattle, were actually indicating we should be selling this week. And so the market has had a little bit of a pullback, and in through that you'll get maybe we pulled December hogs back to 75 cents off of 81.65 or something like that. But I think the market, as it pulls down, we have to take a look at this market and say, it looks to me like this could be another one of those little corrections. We had a 50% retracement from the April high to the low of 67, whatever it was, and we've come back 50%. So that's a normal place, a good place to stall the market for right now and clean up this overbought condition.
Okay, Sue, I'm going to cut you off there. We'll continue this in Market Plus. Thank you so much.
You bet.
That wraps up the broadcast portion of Market to Market, but we will keep this conversation going on Market Plus, where we'll answer more of your questions. You can find it on our website at markettomarket.org. Subscribe to our YouTube channel. You'll get notified when the program and Market Plus are online. You'll find feature stories and my entire interview with Secretary Perdue. Search for Market to Market. Join us again next week when we'll explore how the U.S. leather industry is searching for new markets. So until then, thanks for watching. I'm Delaney Howell. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
Sukup Manufacturing Company, providing equipment and buildings to store and condition grain to help farmers adjust to market swings. We build drying, moving, and storage equipment designed to preserve the quality of their crops. Sukup Manufacturing, store now, profit later.